Hey everyone, welcome back to the channel. Today we're going to take a look at Disney. I think Disney is actually a pretty fascinating company. This is going to be a two-part video once again. So the first one we'll just go over the company, a few things to note about it, and then in the second one we'll go ahead and pull together a DCF. So first thing I want to just kind of point out here is if we pull up their current company information, right, they trade at $185 a share and a $337 billion market cap, so pretty sizable company. And here's just a little bit more about them. A couple quick facts, right? Founded in 1923, headquartered in Burbank, California. Bob Iger was the longtime CEO, and he's now the executive chairman. And Bob Chapek is the CEO now. And then just a few little numbers here. We can look at revenue, net income, right, going from 59 billion to 65 billion, and net income has dropped significantly. This is mostly driven by COVID-19 and their operations of their parks. A lot of the costs for their parks are fixed. So regardless of kind of to visitor numbers, right? If the numbers aren't there, they're going to operate at a loss, which happened during COVID. A little bit about Disney, though. I think this is what's crazy is a lot of people just think of it as kind of Disney, the animated characters that everyone's so beloved and known. But something to really point out is, right, they have interests in Disney, ESPN, Freeform, FX, National Geographic, ABC. Oh, there shouldn't be a comma there. ABC Television. They own 50% of A&E, which owns History Channel, Lifetime, FYI, and A&E. They own 20th Century Studios. It used to be 20th Century Fox Studios. Hulu, they own, I think it's a little over 60%, and there's an option in 2024 to buy the remaining stake from, I think it's like CBS, Viacom. They own Vice, Star Wars, Marvel, and just a lot more. So it's really just a media conglomerate at this point. It's no longer Mickey Mouse. And then also just interesting to note, they operate 12 theme parks across the world at 6 different resort locations in Florida, California, Tokyo, Paris, Hong Kong, and Shanghai. An interesting thing, I believe it was Tokyo, Hong Kong, and Shanghai are all partnerships with either local governments or like local third-party operators. And I think they own a little bit less than 50% of each of those 3 resorts. Um, a little bit of stuff in the news recently. We'll just kind of go back to October of 2020. They announced a reorg of their media and entertainment business, and this is to really help accelerate the growth of Disney Plus. So this is a huge catalyst for them. In November, they reported fourth quarter and full year earnings. So that's what we'll be kind of baselining off of for the most part when we pull together our DCF. They also decided not to do a cash dividend this year, which makes sense. You know, their net income was negative, I think, with the parks being closed. Just from a cash perspective, they have a pretty high debt balance currently from their 20th Century Fox acquisition. Makes sense to kind of forgo that for the time being. In December, they announced they had over 137 million paid subscribers across their direct-to-consumer streaming services. This is awesome, and they're targeting to have 350 million by 2024. Um, so I think that this is actually really big for Disney in the future of just kind of entertainment and media in general. So before Alan Bergman and Alan Horn were co-chairs for the creative office, and they recently named Alan as the chairman for Disney Studios, and then Alan Horn as the chief creative officer. So they kind of separated the two from their roles and gave them each an individual role. So just kind of interesting note of what they're doing internally. And then in March of this year, they actually announced they had 100 million paid subscribers to Disney Plus alone. So this is huge. I think Netflix has 200 and something million subscribers, so it's half the size of Netflix, and it launched in 2019. Risk and opportunities. I think the big thing here is direct to consumer. That's what they call it. This is their streaming services. They're making a ton of investments in this space. They have a ton of content already. The question is, like, long term, are consumers going to be happy having 3 or 4 streaming services? I don't know. We'll see as consumers continue to cut the cord. I know I have Hulu, Netflix, HBO, Disney Plus, and YouTube TV. So I have a lot of streaming services, but I'm probably not the normal consumer on that front. I consume a lot of media that way. It's something I enjoy doing. And I'll sign up for HBO just because I want to watch one show that they have on their platform. So just something to consider is in the future, is it going to be kind of one or the other? But I think Disney is in a good place, especially from a content perspective, to really lead the way there. Theme parks, obviously, if there's continued issues there that could be detrimental, I think we're going to see kind of this build-up reserve of people wanting to get out of the house and go to theme parks and do the experience thing. So I think theme parks will bounce back, but just something to consider. Theatrical releases has been a huge kind of just wonky thing that is still to play out, I think, post-COVID. So right during COVID, I think it was Mulan was released on Disney Plus. And Mulan itself had a whole bunch of controversy with the lead actress, so let's not even touch that with a 10-foot pole. But just from the theatrical release perspective, are we going to continue to release direct to consumer over Disney Plus, where you can pay $18 or whatever it is, or $20 to rent it for the night, or is it going to go back to movie theaters? So that whole business model is being changed as we kind of speak. So just trying to understand how that's going to change going forward and how that might impact certain aspects of the business will be crucial. And the last thing is just regulatory. So when they acquired 20th Century Fox, there was a bunch of regulatory issues with it. I think they paid like $70 billion for it. But part of it is all the Fox News channels had to be spun out and they couldn't actually take those assets on. So I think it's the FCC has, it's called like dual broadcasting rules where there's four major networks. There's ABC, NBC, Fox, and CBS. I think it's those four, but you can't, as a company, you can't own two of them. Um, so the issue was Disney already owned ABC, and when they were acquiring Fox, they would own Fox. So they had to divest of the Fox News network. Then on top of that, since they owned ESPN, they said, hey, look, you already own a lot of sports stuff. If we give you all these regional networks that Fox owned as well in the sports entertainment, you have a monopoly, so you can't acquire those either. So I think or not Google, sorry, Disney is starting to grow too big for their own britches. So over time there may be more regulatory crackdown on them. So it'll be interesting to see how that all plays out. Sorry for saying Google. I mean, Google faces similar issues from the monopoly standpoint, so top of mind. But I think there could be some regulatory challenges there as well. So that kind of wraps up just to give us a little background on Disney as we throw together the DCF. So if we hop on over, join us for part two, and we'll build a DCF there and take a look more at the company and some of their financials and see what kind of valuation we get for them. Thanks.